Hello and welcome to the weekly roundup for the week ending Friday the 23rd of July. Hope that you are enjoying these weekly reports. Please do subscribe to receive regular stock market content. And any questions, please pop them in the comments box below. Love to hear from you. Finally, as well, I invite you to follow our free stock market reports on tech stocks, banking stocks, and really most notably this year, the IPOs. There's a lot of them in the pipeline. We've already seen the very successful Wise IPO come through. So please keep in touch with our reports on which IPOs are coming next. Right, okay, so what have we seen this week? Well, there's been some choppy trading across the week, but both indices here and in the US are bouncing back towards the end of the week. Three key issues this week, really. Inflation continued to weigh on investors. OPEC also impacted the market as the oil producing group and their associates agreed to increase production, which obviously hit the oil price quite hard, sent it down to about $68 a barrel. And we also started the week with economists at the Bank of America downgrading their forecast for US economic growth, which also sent the market off into a bit of a tailspin to begin with. That is also adding to the Delta variant concerns. Really did see a tumultuous start to the week. FTSE was down towards 6,800. Dow down below the 34,000 mark. Then a bit of optimism started to creep in. The view is that inflation is likely to continue to run hot in the near term, but the good news being that we are close to, if not at, the peak. So that sort of took a bit of the heat out of it all. Over in the FX market, we saw the pound against the dollar rebounding from critical support levels on a technical basis, suggesting that further losses may now be contained. The Freedom Day has come and gone for this week, but markets didn't appear to be that convinced that it marked the beginning of the end of the pandemic for the UK. I think with the Delta variant caseload surging in recent weeks, it's still there in the background, and the British pound has been hampered relative to its major counterparts just on that basis, really. I think there's a bit of concern there that the reopening measures could well be reversed. Over in the commodities market, oil prices have seen a week of volatility as well. OPEC and their allies agreed to gradually add more oil supplies to the market from August. Saudi Arabia and the UAE resolved a dispute that was blocking the deal. This move initially saw crude drop briefly below $68 a barrel. Then later on in the week, the group announced that global demand for oil is expected to increase next year to around levels seen before the pandemic, which equates to about 100 million barrels per day, led by demand growth in the US, China and India. That gave some support to the oil price and triggered a bounce back. In the gold markets, we've seen gold settling back around the $1,800 mark again. They did look as if they were going to drop through it, and that continued throughout the week. But gold is now holding this lower ground around $1,800 as the US dollar catches a fresh bid amid a mixed action in the Asian equity markets. COVID concerns remain unabated in Asia and in the Asia Pacific region, lifting the safe haven demand for the greenback. Interestingly, the US Treasury yields also remained at higher levels, courtesy of optimism over further stimulus, which did continue to put downside pressure on gold prices. US President Joe Biden's infrastructure bill is likely to come through on Monday after the debate got voted out on Wednesday. In the stocks, we've seen big moves from Ultra Electronics today as they received a bid approach from Cobham. They're currently trading up around 30%. And after the initial drops on Monday, fueled by the COVID Delta concerns, that hit the whole travel sector hard. We've then seen a lot of them sharply bounce back, just highlighting the news-driven sentiment in that sector at the moment. Banks continue to remain in focus after a terrible start to the week. They've all come back pretty much where they've started. In the US, earnings reports continue to drive price action. Snap has jumped 16% on earnings after they beat estimates and user numbers grow. Domino's also beat estimates and saw their stock up 11%. Intel beat estimates but did warn on lower margins for Q3. And most surprisingly, both the big US airlines, American Airlines and Southwest Airlines, posted second quarter profits. getting a lift from federal aid and a surge in travel demand. So American Airlines actually reported net income of 19 million, snapping 5 consecutive quarters of losses. Don't get me wrong, that was helped in part by federal payroll support. That's it really. So thank you very much for watching. Please remember to subscribe, and any questions, don't hesitate to ask. Have a great weekend.